Hello everyone, thanks for joining us today and welcome to this educational presentation of Attention Traders. This is the trending tool that you have been searching for. Now if you're wondering why, well I want you to take a look at this older chart of Apple. This is a weekly chart of Apple going back roughly about 3 years. And with today's educational presentation, I'm going to share with you a trending tool that actually would have spotted right here that a nice uptrend was underway. Because, for example, if you look at this chart, there's no way to really tell if we're going to keep going up or if we're rolling over and going back lower. But with this trending tool, you're going to see that it really verified a nice 70-point gain in the next 2 years. And once you are in sync with the trend, you can apply any strategy, any technique, any trading plan to that uptrend. I'm going to show you how simple it is using this simple process in a number of different stocks as well as futures, currency pairs, and it's all going to be displayed on our new platform, the PTS Primo Charting platform. This is the educational portal that shows you how to trade in sync with the trend. So this promises to be a great presentation today. Thanks for joining us. My name is Stephen Primo. I am the president and founder of Specialist Trading. About 10 years ago, I teamed up with Pro Trader Strategies with one goal in mind, and that was simply to educate traders. And the reason why we want to educate traders is because most traders rely on someone or something else to make their trading decisions for them. And the only purpose they do that is because they don't have enough education or really understand how to do things themselves. They feel they don't have enough experience or enough knowledge. They didn't go to school for this type of thing. They're in a totally different career. That makes no difference. Anyone can learn how to listen to the market. So we fill that gap by teaching you the things that have stood the test of time. Now, I've been trading for 42 years now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and out of those years, I was a specialist. That's where we get the name Specialist Trading. Specialist is someone who simply made markets, who specialized in making markets in roughly about 50 or 60 stocks. So I was a specialist during the crash of '87 and the bull market that followed. So I've seen and traded just about everything you can think of. It's most likely been renamed or rebranded, but I've already traded it. And I know what works in my 40 plus year experience of trading in terms of consistency. So why waste your time and most especially your hard-earned money searching for that holy grail when I can really shorten your learning curve and really teach you what to focus on. You'll see the attention we give into detail into actually teaching you in today's presentation, because whether you decide to become a student of mine by the end of this presentation or it's just not your cup of tea, we always want to leave you with some education, something that you can use in your own personal trading. So before we begin, I'm going to show you a lot of examples today, but we're required by law to first share this with you. So please take a moment to view our disclaimer. As I just said, I'm going to show you a lot of performance results using this trending technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. Now, I'd also like to take this time, if you haven't done so already, to follow us on Twitter. I give a lot of different educational free information on a daily basis, anywhere from little bits of financial wisdom to actual signals that our strategies have generated. Lots of great free educational information. Feel free to follow us on Twitter. Copy down our handle right there. Now, as I stated in the opening statement, we are different from most webinars in that we are all about educating you. We're strictly an educational company. Our goal is not to sell you some $10,000, $15,000 system that never loses. My goal is not to tell you on a nightly basis what to buy or sell, or as I get so many emails on a daily basis saying, Steve, what's the best time frame to trade? That's not my goal. That's up to you to decide, because everyone has to find their own way, something that makes them feel comfortable. I have students that swear that the weekly bars with our techniques and methods are the best time frame to trade. And then I have other students that swear that intraday trading is the best time frame. Is one better than the other? Absolutely not. What works best for you, what fits your trading style, your persona, is what the right choice is. And that goes with the same market. So as you can see here, my goal is not to force feed you signals. My goal is not to tell you what to do on a daily basis. That goes against our whole nature and our whole concept of educating you. Our goal is simply to teach you how to trade. Now, when I first started trading some 42 years ago, I struggled tremendously. I was doing just about the same thing that most of you may have started out doing or maybe are doing right now. I was looking at tons of news and economic reports and earnings. I was following all the trading gurus. Now, at that time, we didn't have the internet, but we had newsletters. I subscribed to all of them. I was listening to all the pundits on TV. And guess what? Nothing was working in terms of consistency. I still struggled for my first year. I was lucky enough to have some mentors who taught me the specialist edge. So this is what my goal is, to teach you the same things that were taught to me. Now, I've been trading for 42 years. If it's worked for me, hopefully it'll be able to work for you so that you can be trading 10, 20, 30, 40 years down the road, okay? Now, since this is going to be an educational class, I want you to ask me as many questions as possible. We have a good class here today, but if we stop for each slide, we'll be here far too long. I don't want to take up your entire Wednesday, so please wait till the very end of class to ask questions. You'll notice that in my presentation, I'm a little bit different. I love to take your questions, but I really, don't want to stop at every slide. So please wait till the very end, and I promise I'll get to each and every one of your questions. I see here someone is asking me if we trade on the market such as futures. Yes, all of our techniques can be applied to any market. In fact, my main market of choice is the futures. That's what I mainly trade now these days. So everything I teach, I personally trade myself, can work on any market, any time frame, in any direction. Now, the only question I will answer right now is the most common one, and that is this being recorded? Yes, it is. So if you have to leave early, don't worry. We will send each and every one of you a link to this recording. But please, once again, we have a good crowd here today, so please wait till the end to ask questions. All right, with that said, let us begin. Now, as I stated in the beginning, remember, I struggled just like everybody else. It wasn't that I have this Harvard business degree and I automatically knew how to trade and everything was so simple for me. It wasn't. Even though I was on the trading floor and had access to all this information, and I had high-speed computers compared to anyone else, there were no one trading at home. No one had access to that. So I still struggled like as if I were just starting. I had only been trading for a couple of days. So I was lucky enough to have some mentors. They saw how much I was struggling, and they wanted to, give me some advice and some encouragement because they saw how frustrated I was. And this is what my mentors told me. They said what my mentors taught me actually 4 decades ago on the trading floor. What they said was, Steve, it is the easiest thing in the world to overcomplicate your trading. Anyone can do that. And if you think of it, really, anyone can overcomplicate their trading. If you've been trading 20 minutes or if you've been trading 20 years, you can overcomplicate the plan. You can pile on more and more indicators, which is exactly what I did. You can pile on more and more news events to follow. Now, at that time, we used to follow the money supply. I'm sure a lot of you don't even know what that is, but that was the big economic report that all of us followed. We'd also follow also jobless claims and things like that. But you can overcomplicate it with earnings reports as well. You can overcomplicate it by looking at all these different techniques and systems such as support and resistance, Fibonacci, Elliott wave. Trust me, I've traded all of those things. And that's what most traders do. They'll overcomplicate their trading because for some reason we've been taught that the most complicated things are actually the ones that work. So if you can make it more complicated where there's more and more stuff piled on, you'll have a greater chance of being successful. Well, one thing I learned from my mentors is that it's actually the opposite because anyone can overcomplicate your trading. It's the easiest thing in the world to do, but it's the most difficult thing in the world to simplify your trading. Because if you simplify your trading, what you have to do is let go of all these things that are traditional wisdom that for some reason we've been told work, when in all actuality they don't work. There's no consistency. Sure, they'll work every once in a while, but remember, we're looking for consistency because consistency is the name of the game. That's what will sustain you 20, 30, 40 years down the road, not some fly-by-night system that works great one week and then gives it all back the next, which is the way I used to trade. I'd have 1 or 2 great trades, then I'd give it all back. So that's not going to sustain you. So what you have to do is let go. You have to release these things. And it was really difficult for me. I didn't want to. I had always been taught to buy low, sell high, pick tops and bottoms, look for support and resistance, listen to the institutions, look at the volume, listen to the trading gurus on TV. Once I let go of those things, I should say, that's when my trading started to become consistent. So this is what my mentors taught me, to really let go and to simplify your trading. And the first concept they said was, well, in order to simplify, this is what you have to do. One has to simply trade with the trend. Because really, if you're in sync with the trend, That's half the battle right there. Because if you're going with the flow, you don't have to worry about picking tops or bottoms. You don't have to worry about earnings reports. You don't have to worry about support and resistance because you're in sync with the trend. It's like I often say the metaphor. It's like jumping in a river and just going with the flow down the current, swimming against the stream there. I mean, the current. So it's a lot easier with the current at your back. So you don't have to rely on those things. They really don't matter that much anymore. I stopped looking at news 40 years ago. So I'm still here. So one would say, well, gosh, I guess it doesn't matter because he doesn't look at it. No, it really doesn't. Now, if you're investing in a company for the long term, sure, you want to know about the inner workings and the CEO of the company and the direction. But most traders are holding things for a couple of weeks or maybe a couple of months, and that's, in that time frame, there's really no need to worry about support and resistance, earnings, things of that nature. There really isn't. I've stopped looking at those things, like I said, 4 decades ago. So we need to be in sync with the trend. Now, this is Trading 101. Everyone knows this. This is what we're taught from the very beginning. And in fact, there are some very common tools that people use to find the trend. And you can either use indicators. A lot of people like to use short-term indicators to tell them what the trend is. Another way to define the trend is through patterns of what the chart is telling you, higher highs and higher lows or vice versa. And still, other traders like to look at different time frames, all right? If you're trading, let's say, an hourly chart, you want to make sure that the daily chart is in a downtrend, and that way the hourly chart will be in a downtrend. They'll be in sync. The higher and lower time frames will be in sync with each other. These are all very generic and substantial ways to trade with the trend. They're really not, though, the cream of the crop way of trading with the trend, though. They're very generic, and they have certain levels of consistency, but not a lot. This is why traders have a difficult time in deciphering what the trend is, because these tools you see here in front of you are okay. They're just not really, really consistent. So if we want to trade with the trend, we have to let go of these things and focus on something else, because what these trending tools do in front of you is they're basically reacting to what the trend is. They're a little late to the game. So what we need in order to be in sync with the current trend is a tool that translates what the market wants to do. See, we're not following and not reacting to what the market has already done. We're being translated what the market wants to do on a tick-by-tick basis. All right, it's like speaking to someone in a different language. We need a translator who can translate what the other person is saying. Now, that tool is the PET-D. I've spoken about this before. This is probably one of our most powerful tools we have at Specialist Trading and Pro Trader Strategies. This is something I learned decades ago on the floor of the exchange. When we first learned about it on the floor, my mentors taught me, we called it the formula, because there was a specific formula. It wasn't very difficult. It was just cumbersome that you had to define and figure out on each bar, almost on a tick-by-tick basis. And it was very difficult to apply it to intraday trading. We could only use it really for overnight or for daily bars, because there was just too many calculations that needed to be met. Well, with the advent of high-speed computers and programmers, we've taken all of the hard work out of it for you. So what exactly is the PET-D? Well, it's a proprietary algorithm, once again, that we've put together at Pro Trader Strategies and Specialist Trading, and we've developed it into a color bar tool. All right. All you're going to be seeing once you apply the PET-D is either a green or a red color that defines what the current trend is. It can also confirm your signals. But the beauty of this is there are literally dozens and dozens of ways to apply the PET-D. I mean, there's almost hundreds of ways to use it. We feel the best way is as an early trend detector. That's what I'm going to be sharing with you today. Because the tools that are very generic, as I stated earlier, are often a day late and a dollar short. By the time you find out what the trend is, it's too late. The beauty of the PET-D, although it's not 100% guaranteed to work each and every time, in fact, I'll show you a couple of examples where it didn't work today, but the beauty of it is it's so consistent, and that many times it can tell you in advance before there's any clues that a trend is about to begin. And as I stated, once you know the trend, you're already that much ahead of the game. You can apply any method, any technique, any strategy in sync with that trend. For example, let's look at this older example in Aetna right here. Now, someone looking at this will say, well, yeah, Steve, it's easy to see that there's an uptrend. And by the time you get in right here at the top, this is what usually happens, right? Because you're a day late and a dollar short. once we apply the PET D, it automatically colors the bars either green or red. Now you see how way back here in the beginning, we already knew in advance that we were in an uptrend. And well before the market fell out of bed, we already knew that we were in a downtrend. So as it says right here, the beauty of the PET D is that it tells you which direction you should be trading. And once you know that direction, you can apply virtually any technique to that direction. And this will give you the consistency you are looking for. You will no longer have to rely on earnings reports. You will no longer have to rely on news events. You will no longer have to rely on support resistance. I mean, why overcomplicate your trading that way? Remember, these are the things I used 4 decades ago, and they didn't work for me then. It wasn't until my mentor said, listen, as long as you're in sync with the trend, you don't have to worry about those things. Why overcomplicate when you're adding what they call useless noise? Because there's no consistency in those things. All right, so let's talk about this technique which I want to share with you today, which is a trending technique using the PET D. And when we say trending technique, it's an early trend technique that can really, so many times before anyone else has noticed a trend, we can already be that much ahead of the game. Here's the setup. We're going to just use a 10-period simple moving average, and then we're going to apply the PET D. That's it, okay? But what are the rules of this particular setup? All right, so we're looking for a new uptrend before anyone or anything else can notice this uptrend is in place. Here's what we're looking for. When a price bar is colored green by the PET D, and it's also completely below the 10-period simple moving average. When we say completely below, we mean that nothing is touching the 10-period simple moving average. Well, then we'll look for an upward bias once price trades 1 tick above that bar. Okay, let me show you what I mean here. I know that may be a little wordy, it may seem a little complicated, but we have the 10-period simple moving average right here. We've applied the PET D. The bars are either going to be colored red, and even though this is an up day, the outline is red. So this is an up day in an overall short-term downtrend. But now the next bar is up and the outline is green. So we have a bar that is completely green and is completely below the 10-period simple moving average. This is the bar that is the setup, okay? Once we trade 1 or 2 ticks above, we should be in the beginning of a brand new uptrend. Now, most people will say, how can you tell just off 1 or 2 bars? That's how sensitive the PET D is. That's how well it translates in advance, better than any other tool I've used in 4 decades, what the short-term trend is. Now, what if we want to go short? What if we want to buy puts? All right, well, here's the downtrend technique, looking for a brand new downtrend before anyone else has spotted it. All right, when a price bar now is colored red by the PET D, and that same price bar is completely above, by completely above we mean nothing is touching the 10-period simple moving average, well, then we'll look for the beginning of a downward bias, but this can only happen once price trades 1 tick below that very same bar. All right, so let's look at an example here. Here's the 10-period simple moving average. We have an update colored or outlined green. We have a bar that is completely above. It's not touching the 10-period simple moving average, and it's colored red. This is our setup bar. But we're not going to just sell at the market because this is not a strategy. Remember, we're looking for the trend. Once we know the trend, we're not going to bet against the trend. We're going to be in sync with it. So if we trade 1 or 2 ticks below, that is our warning to just look for sell setups. We can use any strategy. I don't care what it's based off. It could be based off the tides of the ocean. It makes no difference. But it must be looking for sell setups. All right? So that's how you are going to become a consistent trader. And that's how you simplify your trading, by simply being in sync with the trend. Remember, trading does not have to be complicated. We overcomplicate it ourselves. There's no reason to. Let me show you how simple it is. I'm going to share with you a lot of recent examples using this technique. And remember, we're just trying to capture the trend before anyone else has spotted it. This is not a strategy. I don't want you to think, well, gosh, Steve, so where do I buy or where do I place my stop? Which I know will probably get the question at the end. This is not a strategy. This is a trending technique. So if you have a strategy or some type of technique, a trading plan, you can apply it just as long as you are in sync. Remember, being in sync with the trend is half the battle. Okay, let's look at this example in FSLR for solar, okay? All right, now we applied the 10-period simple moving average, just a very basic simple moving average, okay? And price is oscillating above and below. So we have no idea what's going on here. It looks like we're going lower. Let me show you how simple it is to apply this process using our platform, all right? All you have to do in our green strategy tab up here, it's where all our strategies and techniques, is to click on the PET D. And once you do that, it automatically changes the colors from green to red. So we're looking for bars that are either completely above or completely below. So far, nothing, but what do we have here? A bar that is completely below and it's green, all right? So this is an early warning telling us that most likely we're going to be in the beginning of an uptrend. But we have to trade above that. So we have to wait until we trade above it to have confirmation. Well, we traded above it on the very next bar, and look at the nice uptrend that ensued, all right? So you would have known well in advance before this started to go up for solar to look for some type of buy setup, all right? That's all you have to do. Maybe you would have bought here on these down days. There's a number of different ways to enter. I'll show you tons of examples in different markets and time frames. Here's another example in AIG. All right, we have the 10-period simple moving average. Price is below, then it's above. We have really no clear-cut idea here. We're only looking at about 9 or 10 bars. But actually, we do have a clear-cut idea once we click on the PET D and the bars change. Because once we are above that 10-period moving average, what do we have here? We have a red bar that is completely above, not touching. And so this is our early warning that a downtrend may be in play. But we need to trade 1 or 2 ticks below that before it triggers. And it triggered, and look what happened, okay? So you could have been getting short well in advance before anyone knew it and before this large drop down. See how simple that is? We're not looking at any earnings. We're not listening to anybody in the chat room. We're only focusing on one thing, the chart in front of us. We're listening to what the market is telling us. I'm not listening to any trading gurus. I'm not listening to any blogs. I'm listening to what the market is telling me. I mean, shouldn't that be the only thing we listen to? That should be the only thing we focus on. But the reason why most traders don't focus and listen to the market is that we've never been taught. For some reason, the entire industry is based on listening to some master trader or listening to some indicator that nobody knows what it's, how it works or how to apply it, or listening to some system that supposedly never fails, all right? These are all outside sources. They're not focused on the chart in front of you. The PET D is simply a translator. It's translating on a tick-by-tick basis what the market wants to do. All right, XL and X, we see once again here, we're oscillating above and below, and now we're completely below. We click on the PET D, and we see here that this bar is green. So this meets the requirements of an uptrend possibly beginning. We have to trade above it, and it took a couple of bars, but we finally did. And we were basically going sideways for another week until the uptrend took place. Now, this is where people usually say, wow, look at this. Some great news must have happened to make this stock gap up. That's a good sign. And the guy I follow in the chat room says this fundamentally, the earnings are really good. So I think I'll buy this. This is how most traders trade. They're usually a little bit late to the party. Wouldn't you like to know back here, not worrying about what the earnings are, not worrying about what someone says in a chat room, but just listening to the market because the market was telling you it wanted to go higher. How about SYF? Okay, this is recently, this is in November coming into the end of December. We were below the 10 period and then we crossed above and we have one bar that is completely above. We apply the PET D and it meets the requirement. It's red. So that is a sign that this may be the beginning of a downtrend before anyone even knows it. All we need is that it confirms that it trades 1 or 2 ticks below that. Once it does, chances are, not guaranteed, remember nothing is guaranteed in the stock market, but you have a high probability that most likely we're going lower. How would you have liked to take advantage of that early trend detection without having to listen or worry about any economic news, worry about any signal service? You, for the first time, are in charge of your own trading destiny. Here's an example in PG. This is an older one that happened in the summer. Price was originally above the 10 period, and then we dropped below. But if you notice here, every day is higher. It's opening and then closing higher. Let's apply the PET D. Well, these 3 days here were outlined red. So even though they were completely below the 10 period simple moving average, they didn't meet the requirement. Not until this day. This day is completely below the 10 period. and it's outlined green. So this is an early warning that an uptrend may be in place here. We need to trade above that because we could open up the next day and then go lower. So we need confirmation that we trade 1 or 2 ticks above. And we did the very next day, and we had a very nice continuation going into August and September. Let's look at DVA, okay? It looks like we've made a bottom right here, and we're starting to go higher, right? Well, that's what maybe someone would say on TV, some of the financial analysts that say at the end of the day. Let's see what the market is telling us. Well, we have no setups here telling us that an uptrend is in place. We would have had to seen a green bar completely below. So we don't have that. But what do we have here? We have a red bar completely above. So that is the market, not some guy on TV, but the market telling us that we may have a downtrend in play here as long as we trade below it. Well, we opened much lower, and look at the nice downtrend that ensued. How would we have known that? All right. The only way we knew that is by listening to the market. There's no need to listen to anything else. Remember, like my mentors taught me some 42 years ago, it's the easiest thing in the world to overcomplicate your trading. It doesn't take much character to do that. You can be a student of the markets for 1 week only, have learned how to trade in 1 week. All right. You could add any indicator, have tons of financial events that you have to follow, tons of people that you're following on Twitter, tons of blogs you're going to. That won't make you any more successful. What makes you, in my opinion, a consistent trader is when you strip all that away and just listen to the market. Remember, the pet D is your translator that tells you what the market wants to do. Now, a lot of people are wondering, well, Steve, I don't trade stocks. I trade futures. I trade commodities. I trade, currency pairs. It makes no difference. Wherever there is any trend, the pet D can be applied with the 10-period simple moving average. Let's look at Apple. Remember that first chart we shared with you, the Apple weekly chart? Here's how simple the process could be on a nightly basis by using our platform. You would just click on Apple and choose the weekly time frame, and then apply a 10-period simple moving average, all right? In our indicator, this is our indicator icon right here. You just click on indicators and choose simple moving average. All right, so this is the 10-period simple moving average plotted, not really giving us any information yet. For all we know, this is just going to roll over and come all the way back down. And remember, this is going back 3 years. So we didn't know what Apple was going to do. But in order to find out what side of the market we should be on, maybe we were thinking about buying Apple, but we weren't sure yet. Or maybe we held on to Apple and we had a nice profit and we were thinking about selling it because we were a little worried about the market. Well, click on the pet D. Once you do that on our platform, the colors automatically change. So we don't see anything telling us to sell here. We would have needed to see an entire red bar entirely above the 10-period simple moving average. We don't see that. But what do we see here? We see a green bar entirely below the 10-period moving average. Now, this is a weekly bar, okay? So this is better suited for investors or swing traders. Let's say you wanted to buy Apple. Well, this is a great sign that, not guaranteed, but a great sign that you may be in the beginning of a brand new uptrend where most people wouldn't see this. This is the market telling you that I think I'm going to start an uptrend here, okay? So this is your setup. All you need is for it to trade above there. You don't need it to close up there, just to trade above that. And as we saw later on, Apple rose over 70 points in the following 2 years. Remember, this is not a strategy. I'm not going to tell you, most of the questions I'll get, once again, will be, well, Steve, where would I put my stop? Where would I exit? That's the information that comes from a strategy, which we also have and we teach those, but this is just a trending technique. So it doesn't matter what strategy you use. As long as you know you're in sync with the trend, in this case it's an uptrend, the odds for you being consistent are much greater than someone trying to pick a top or exiting too early. Here, you could be just looking for buy setups with whatever plan you have. All right, let's look at a weekly chart of IBM. Remember, I said nothing in the market works 100% of the time. As we see here, we are now above the 10-period moving average. This was a couple of years ago. We applied the pet D, and this fits the requirement perfectly. We have a red bar entirely above the 10-period simple moving average. So look what happened. This is our downtrend setup. We went below it, and we went right back up. All right. So this is why we say this is not a strategy. This is not a technique to buy or sell off of, because you wouldn't simply just sell here. You have to look for a sell setup. Now, most likely because the market went higher, you wouldn't get a sell setup. But if you did, you most likely would have had some type of a loss, not that big of a loss, but a minor loss. Now look what happens later on. We get another sell setup up here in February of 2018, just about a year ago. Okay, this is a weekly chart. This is another downtrend setup. We traded below it, and then this one kicked in. So this one worked well. If you were in sync with the downtrend, you would have made some nice substantial gains if you were shorting as opposed to only buying, which is what most traders do. We're all taught once price is going lower to buy and once price is going higher to sell. Well, if you're looking for those type of strategies at Specialist Trading and Pro Trader Strategies, you've actually gone to the wrong place, because our philosophy is only to be in sync with the trend. As in this case right here, if the trend is down, you will have a higher level of consistency if you're only shorting or buying puts or looking for some negative bias. That is our philosophy at Specialist Trading. Now here's a monthly chart of Netflix. This is going back roughly about almost 5 years, okay? No one knew that Netflix was going to take off 5 years ago, 4 or 5 years ago. And in fact, looking at this chart on a monthly basis, these are monthly bars, there was really no clue. We're just basically going sideways. So for all intents and purposes, there's no way to tell just by looking at this chart what Netflix wanted to do back in 2015 or 2016. But in all actuality, if you had our platform and the PET D, you would have had some tremendous setups to go long. Let me show what I mean here. You click on the PET D. There are no sell setups here. But what do we have here? One bar completely below that is colored green, and then followed by another one that is followed green, followed by another one. These are all, flashing signs that an uptrend may be in place. And someone would say, well, Steve, you had basically 6 months of nothing happening. I know, but the market is continually telling you, in fact, it's screaming that I want to go higher. You see how the PET D was really telling you it wants to go higher, even though nothing was happening. This is your early warning that you shouldn't be shorting this, or this may be something that you may want to get involved in, because we all know what happened with Netflix coming into the next 3 or 4 years. Now here's a monthly chart of Halliburton, okay? Now here's where you have to be fluid and change with the trend, because sometimes the market changes its mind, okay? And our job is not to pick a top, not to say how high something will go or how low something will go. Our job is simply to listen to the market and then jump on board whichever direction it wants to go. It's simple. We will never try to pick a top or bottom. That's silly. Why would you think that you know where the market is going? No one knows. But we can get in sync with the market and just basically piggyback whatever direction it wants to go. So here is roughly about 6 or 7 months looking at Halliburton. These are all monthly bars. We apply the PET D. And we see here that we have a bar that is completely green and entirely below. So this is our uptrend setup. Once we trade above that, all we need to do is trade 1 or 2 ticks above. Most likely there will be a nice uptrend in place. So we didn't really go that much higher. In fact, we only had about 3 or 4 months of a higher market, and nothing much happened. And then we had a strong down month here. We're back to where we started. So most likely you wouldn't have done anything, or if you were long, you had a minor loss on your hands. But look what the market's telling us now. It's telling us that it changed its mind, because now we have a bar that is above the 10 period and it's completely red. So the market will do that even on a monthly bar. It changed its mind and said, you know what? Now is the time to have a negative downward bias. And this is where it kicked in. So this is what we mean by, not being 100% foolproof. The minute it trades above or below, we're going to scream to the upside or to the downside. The market is allowed to change its mind. It's just up to us to pick a strategy that is in sync with what the market wants to do. Now, those are monthly bars, okay? We looked at weekly, we looked at monthly bars of stocks. Let's look at a 30-minute bar of the E-mini futures, which is mainly what I trade. I trade tick charts of the E-mini futures, but it doesn't matter. Here's a 30-minute bar. Once again, looking at this setup, doesn't look like there's any advantage here. The market's just going sideways. Each one of these bars is a 30-minute time frame. But if we apply the PET D, we see here that, well, we have a nice setup. Here's an uptrend setup, and nothing really happened for the next day until ultimately it did kick in to the upside. So as you see, many times it takes a few bars to kick in. So even though an uptrend setup was flashed right here, we had to sit and wait for the next day before the market really took off. Here is a weekly chart of the Canadian dollar. All right, looks like it's going up, right? At this point, most people say, well, gosh, the Canadian dollar keeps going higher and higher on a weekly basis. It just is having a pullback right now. The sell-off, I'm going to go long because that chat room I go to, that forex chat room, loves the Canadian dollar. So this is my chance to get in at some lower prices because we have a nice sell-off right here, and it's probably going to go up and make new highs, right? This is the way most traders make their decisions. This one was based off what someone was seeing in a chat room. Why don't we base the decision off what the market is telling us? What's our translator saying? Well, once we apply it, we see that our translator is saying this may be the beginning of a downtrend because we are completely above the 10 period and the bar is colored red. So don't listen to what someone is saying in a chat room or a trading room. They have no more qualification than you do. I don't care how long they've been trading. I don't care how much they think they know. It's, why wouldn't you just focus on what you're trading, which is the currency pair in this example. Here's a weekly chart of the Canadian dollar. Had you taken advantage of this setup, well, look at the nice downward bias you could have had in the following months. All right, so let's recap now. Remember, we're only going to apply the 10-period simple moving average along with the PET-D. All right, we want to look for bars that are completely above the 10-period moving average and that are colored red. This could be the beginning of a downward bias in the market, whatever we're following, whatever time frame, whatever market. If we're looking for a long setup, we want to see a bar completely below the 10-period moving average, not touching at all, colored green. This could be the beginning of a bullish or uptrend in whatever market, whatever time frame we're trading. Now, extremely important points to remember. This is not a trading strategy, once again, okay? I know a lot of you are going to say, God, this is great. How much money could you have made trading this? This is not a strategy. This is just a way to find the trend earlier than anyone can. And that's half the battle. If you know what the trend is before anyone can notice it, you can get in using your strategy or your techniques or your trading plan before anyone is involved and really get in before the big move happens. But it's not a trading strategy. You need to have a plan that is in sync with the trend. In order to have a trading strategy, you need advanced entry signals. We didn't talk at all about where you'd enter. We just talked about confirming when an uptrend was in place. We didn't talk about stop placement, all right? You have to protect yourself. I showed you a couple examples where it didn't work. A lot of times, you'll have false starts here and there with the trend. We didn't talk about exiting plans. Where are you going to get out, okay? You had a lot of potential to capture those 70 points in Apple in 2 years, but where would you have exited? We didn't talk about that because this is not a strategy. And lastly, we didn't talk about money management. How many shares, how many contracts? Extremely important pieces of the puzzle that need to come into play when you have a trading plan. This is simply a finely tuned way to determine what the short-term trend is before anyone could spot it. So, before you ask me something, I want you to ask yourself and ask yourself honestly. We are already 1 month into 2019, okay? We're going to be ending here in just a week or so. Do you think this trending tool can help your trading for the remainder of the year? Look back at your last 10 or 20 trades. Most likely you were losing because you were out of sync with the trend. You were buying when you should have been selling and vice versa. Do you think this trend tool can help your trading for the remainder of the year? Well, we have a great offer, a great special for all the attendees today. This is a great discount. We're going to offer you the PET-D. This is our Primo Early Trend Detector. It's our roadmap for any market. It comes with so many different applications, ways in which to use it. You're going to get the proprietary color bar algorithm. You're going to get the add-on. So if you want to apply this for other platforms such as TradeStation, MT4, Metastock, NinjaTrader, Sierra Charts, you can apply it and automatically the bars will turn green to red. Now it comes with 2 continuation trading techniques, also 2 pullback trading techniques, along with a trailing stop technique. So there's, as I said, there are numerous ways to apply the PET-D. For example, let me share with you a technique that you can actually use for trading. This is simply by, once you break out of a short-term high, by buying once you go above a green bar, all right? Now look at how you could have had upwards of 800 pips by using this technique, which we teach you in the course. These are all buy setups. As we see a strong move to the downside, the euro-yen, we apply the PET-D, and once all the bars are red, we simply want to sell once we trade below certain levels. 500 pips potentially could have captured. Now here's an hourly chart of the E-mini futures. You have a strong upward trend. You would have known you were in an uptrend well before anyone else did because the PET D colored these green. You could have taken advantage of this first buy and potentially captured upwards of 55 points in E-mini, over $2,500, $2,600 per contract. That's on an hourly chart. On a 5-minute chart, the same process. You apply the PET D, and if the bars are all red, you look for certain points of entry, which we teach you in the class and in the course. Here's a weekly chart of the Dow. The same technique you could have bought once we traded above a certain point. That would have told you 6,500 points in 1 year that you were going higher that you could have potentially captured, as well as a weekly chart in INCY. Stock dropped 50 points in 6 months using this technique, which is in the course. So this is included in our early trend detector, along with what I taught you today. There are just multiple uses for it. That's why we say it's the most powerful tool we have. But this is a great discount we're offering you today, but we're not going to stop there. We're also going to throw in our PTS Primo charting platform because everything is one click away. All right, we know that a lot of you use different platforms, like I said, TradeStation or Metastock, and we have the add-ons for that, but it's so much more simpler by applying on our platform because everything is one click away. Let me show you what else is offered. There are so many other things that I've accumulated and that I use in my own personal trading that are on the platform. We have the one-click PET D access, as I shared with you in the presentation. It's one click away, and you'll see the bars automatically change color. There's nothing to upload or download. We have our enhanced buy-sell line, which is simply a way to determine the overall trend. And PET D is the short-term trend. This is the overall trend. We also have short-term pattern recognition tool, all right? We have a signal scanner, so you can scan for these setups on a nightly basis. Over 90 of the most prominent technical indicators. We also have free Bloomberg TV. Once again, fundamental news is not required at all, but if you feel you can't cut the umbilical cord and you need to look at fundamental news, who are we to tell you not to trade a certain way? Remember, our goal is simply to teach you. We're not telling you how to trade or how not to trade. So if you want to look at the earnings reports, guess what? We provide you with free Bloomberg TV on the platform. And this all comes with personalized tech support as well. Now, for today only, if you take this offer with our PET D course along with the platform, you'll get 12 months included free. Now, usually, this would cost a tremendous amount. I believe close to $1,800 or $1,900. This is totally thrown in free. That's roughly about an $1,800 value, free, 12 months of the platform. So here's what the discount is for our roadmap. Remember, you're getting complete access to the PET D. You're getting all the different continuation trading techniques, the pullback technique, the trailing stop technique. You can apply this to any market. Doesn't matter if you trade currency pairs, futures, commodities, even Bitcoin. All right. Along with this, you're getting educational mentoring correspondence. You can contact me whenever you'd like via email with any questions, and I'll be there to answer any question or look at any example you may be interested in trading. Now, normally, this would cost you close to $4,000, okay? We're going to throw in the PET D course and the application and the platform, 12 months of the platform for only $29.95. But we're not stopping there. We'll also have a payment plan for you. Now, you can also have this payment plan for a one-time fee of $14.97 plus $97 per month. But this is for today only. You must act in the next 24 hours because after that, all of this will probably go back up to almost $5,000 cost basis. So we want you to take advantage of this. Remember, it's the beginning of the year. Don't you want to learn how to be in sync with the markets? Don't start out 2019 the same way you ended 2018. Very frustrated, disappointed that you're nowhere near where you wanted to be. It's time to invest in yourself, okay? Here's how to take advantage of this great offer. Contact Pro Trader Strategies. I developed the PET D along with the platform with Pro Trader Strategies, and they can answer any question about discounts, about the payment plan with you. I would suggest calling them right now at area code 310-598-6677. Now, that link you see at the very bottom is the link that will take you for the sign-up page and give you more information about this special PET D package. But if you see there, that's not a live link, but if you look in the chat box on the far right-hand corner, a live link has been posted. Now, I stated I would save the last 10 or 15 minutes for any of the questions you may have. So if you have any questions, please go to your question and answer box right now. Type them in. I promise I'll answer each and every one of them. And I'm going to leave all this information up here for you so you can contact Pro Trader Strategies. Remember, I handle all the teaching and all the trading aspects of our two companies. They handle all the tech support, all the discount and pricing. So give them a call at area code 310-598-6677. There's absolutely no obligation. They'd be happy to answer any question that you may have concerning that. Okay, so let me open up the question and answer box. Let's see here. Can I use this on 2-minute or 5-minute charts? You sure can, Susan. I showed you a couple of examples on a 5-minute chart. I personally use this on tick charts. I was using it this morning on a couple of trades. Because of the fast market, I missed one, but I used it this morning using a tick chart. So yes, it makes no difference what market. You can also use it on a daily chart. People are asking on daily charts. Yes, I used it on all the daily charts examples, most of the examples I shared with you today, okay? Asking how can I apply it? Well, in order to apply it, as I stated, this is just a trending tool. In order to apply it, once you know the trend, many times the market will be just going sideways, and you'll know by using this technique I just shared with you that you're actually in an uptrend. Well, now you need to apply some sort of strategy or some type of discipline or some structure. We have upwards of 9, almost 10 different strategies. So that's another way to contact Pro Trader Strategies. There are also some great trading techniques on the platform that come with this special offer. They're included. So I would contact them if you don't have a specific trading plan, okay? Nilima asks, is there any guarantee? Well, we can't, once you become a member of our classes and courses, we can't give you a guarantee that something will work because everyone is encouraged to use it their own way. In other words, someone can use it on a 5-minute time frame and have average success, while someone can use it on a daily bar and have tremendous success, and according to what they decide to trade. So there's no way, even though it's not guaranteed, some people have greater consistency than others. So what we do is we don't guarantee that you'll be successful because remember, we're an educational company. We're just teaching you. But if you're not satisfied, Pro Trader Strategies will work with you and exchange it for another product that we have on our websites, okay? But remember, so this isn't something that you can try for a month and then say no thank you, because once again, once you try it for a month, well, you can reverse engineer it, you can learn how to copy it and then use it on your own, and that really wouldn't help anyone. So the best thing to do is to contact Pro Trader Strategies. They'll be happy to work with you. They can show you how you can apply it, and they can structure that payment plan with you so that you can be really happy. And once again, you're also getting free mentoring correspondence with yours truly. So if you feel like, well, gosh, I have this information now, but I'm not really sure how to apply it, you can email me anytime you'd like, and I would get back to you just as soon as I can, okay? So the best thing is, in my opinion, is to contact them. If they're busy or whatever, give them a chance, and they will, answer any question. There's absolutely no obligation, okay? There's absolutely no obligation. You can ask them questions, and you will feel more comfortable with that, okay? But they handle all the discounts. They handle all of the returning policy, and they also handle all of the tech support, okay? Let's see, Ricky asks, will this tool work with any time scale? 1 minute, 30 minute, 1 hour, Yes, it does. As I stated, I showed you examples on a weekly time frame. If you were, I don't know if you came late, Ricky, but I showed examples on a weekly time frame. I showed monthly bars. I showed a 5-minute bar. I showed daily bars. I showed currency pairs. I displayed futures markets as well as stocks. So as you can see, it transfers over on all of them, And remember, you'll get a recording of this, a link to this recording, most likely in the next hour. But this great package of only $29.95, or if you want a payment plan of $14.95, I believe, or $14.97, and then $97 a month, is good for 1 day only. You have to take advantage of this. Many of the setups I showed you had tremendous consistency. So this is a great way to get in sync with the market, but then you must apply some type of trading plan. So if you don't have a trading plan, talk with Pro Trader Strategies. They can set you up with one and maybe give you an even greater discount. I can't promise that, but if you're willing to purchase a strategy, they may be able to have an even better deal for you. There's no obligation. Give them a call, and they'll be happy to answer any question you may have. And remember, if you want to apply this on your current platform, this can be applied to just about any of the major platforms, NinjaTrader, TradeStation, Metastock, MT4, Sierra Charts, just the host of the most prominent trading platforms, okay? Great questions. And remember, please feel free to watch this video presentation as often as you like. But if you want to take advantage of that deal, remember, most likely everything we're talking about today will go up close to $5,000 a day or two from now. So if you want to get in for $14.97 and then just only $97 per month after that, this is your chance to take advantage of this. Remember, it's the beginning of 2019. You don't want to start out the way you started out 2018. If you're frustrated with your trading, if you're discouraged, I really think I can help you, okay? Just jump on board and I'll be there with you every step of the way, okay? As we conclude, I hope you got some education out of this. I just really want to thank you and really hope you learned a little bit today. Remember, we are first and foremost an educational company. Our job is simply to educate you so that you can be in charge of your own trading decisions going forward. Thank you so much for attending. I wish you the best of luck as you look at one last time at our disclaimer. I wish you the best of luck, but I look forward to all of you becoming students of mine in the PET-D course along with our PTS Primo charting platform. Thank you so much. I'll see you all next time. Bye-bye.